Welcome to a deep dive where we take complex source material and really unpack it so you can get informed quickly and understand what actually matters.
Yeah, and today we're tackling the world of corporate earnings. Specifically, we're diving into excerpts from HP Inc.'s Q2 fiscal year 2025 earnings presentation. That came out May 28th, 2025.
Our mission here is to, cut through the corporate speak, the financial jargon in this presentation. We want to pull out the most important numbers, the key trends, and really the core insights.
So by the end of this, you should have a pretty clear picture of how HP performed last quarter and, maybe more importantly, what they're seeing for the rest of the year.
Exactly. And maybe a quick heads up first. Like these presentations always have forward-looking statements.
Right. Those are management's best guesses, their expectations, but they involve risks, assumptions. Things might not pan out exactly as they say.
And you'll also see numbers presented in like two ways. There's the standard accounting figures, a GAAP.
Generally accepted accounting principles, yeah. And then there are these non-GAAP financial measures. We should probably dig into what non-GAAP means and why companies use it. Maybe just a minute.
Good idea. But it's worth remembering right up front, as the source itself says, the company relies primarily on the standard GAAP figures.
Definitely. Okay, so let's start with the big picture numbers for HP's Q2. The headline number, total net revenue,
Came in at $13.2 billion.
which represents year-over-year growth of 3.3%. Now, if you strip out the impact of currency fluctuations, it looks a bit stronger.
How much stronger?
About 4.5% growth in constant currency. So yeah, the top line revenue is growing.
Right, revenue's up. But, okay, here's where it gets interesting, I think. If we look at profitability, the non-GAAP operating profit for the whole company was $961 million.
And the non-GAAP operating margin, that's basically how much operating profit they make for every dollar of revenue. That was 7.3%.
Okay, but how does that compare to last year?
Well, compared to Q2 FY24, the total non-GAAP operating profit was actually down by $164 million.
Ooh, okay.
And that non-GAAP operating margin, it decreased by a pretty noticeable 1.5 percentage points.
So revenue grew a bit, but they made less operating profit on it compared to last year. Their operations were less profitable.
Exactly. That's kind of the main tension, I'd say, in this quarter's results. Growing revenue, but less profitable operations year over year.
So where did that $13.2 billion actually come from? What's the mix?
Looking at the mix, personal systems, laptops, desktops, workstations that made up the vast majority, 68% of total revenue.
Which leaves printing accounting for the other 32%.
And geographically, HP is definitely global. The Americas were 44% of revenue.
And the U.S. is most of that.
Yeah, U.S. specifically was 36%, Canada and Latin America the other 8%. Then you have EMEA, Europe, Middle East, Africa at 33%.
And the rest is Asia.
Asia Pacific and Japan, APJ, was 23%. So, do the math. A significant chunk, 64% of their revenue, comes from outside the United States.
That's a really important perspective. Okay, before we dive deeper into those personal systems and printing segments, let's tackle that non-GAAP thing we mentioned. We saw it used for operating profit and margin. Why do companies like HP even use these non-GAAP numbers alongside the standard GAAP ones?
Well, GAAP, like we said, they're the standard rules for financial reporting. Non-GAAP measures are basically these alternative calculations where companies exclude certain items.
Why exclude things?
The argument is that it gives investors a clearer view of the core, the ongoing operations of the business. They try to set aside things they see as maybe one-time costs or non-cash charges or things outside the normal day-to-day business.
So they're trying to show the business without sort of the noise?
That's the idea. For example, the source material shows that in Q2, the standard GAAP operating profit was $654 million. But the non-GAAP number they highlighted was $961 million.
Wow, that's a big difference. Over $300 million. What gets excluded?
It's things like restructuring costs, charges related to acquisitions, maybe some legal settlement costs, and also non-cash items like amortization of intangible assets.
What's that? Amortization?
It's basically accounting for the cost of using up assets they acquired over time, like brand names or patents from a company they bought. It's a real cost, but it's not a cash outlay in that specific quarter.
Okay, that makes the gap clearer. But it's also important to remember what you said earlier. The source itself notes non-GAAP measures have limitations. Excluding amortization, for example, doesn't mean that asset isn't actually losing value over time, right?
Precisely. Those excluded items do impact the company's overall financial health and results. You really shouldn't look at non-GAAP in isolation. GAAP is still the primary standard. It's just about understanding what's being taken out of the numbers you're seeing.
Got it. Okay, great context. So let's take that deep dive now into the bigger segment, personal systems. PS revenue for Q2 was $9.0 billion.
And this segment was really the main engine behind that overall revenue growth we saw earlier. PS revenue was up 7.1% year over year.
Which is pretty solid.
Yeah, and even stronger, 8.1% if you look at it in constant currency. That's decent growth for, a fairly mature market like PCs.
So what powered that growth? What did the presentation say?
It points to a few things.
Huh.
Higher commercial volume, so selling more to businesses, an increase in average selling prices, or ASPs.
Meaning they got more per unit sold?
On average, yes.
Yeah.
And also momentum in what they call their key growth areas within the PS segment. We can touch on those later.
Okay. And you mentioned commercial volume. Is that the main driver?
It seems like it. Commercial PS revenue specifically grew 9% year over year, and the source explicitly links this to refresh activity around Windows 11.
Ah, the Windows 11 upgrade cycle. We've been hearing about that.
Exactly. It suggests businesses are finally, or maybe continuing, to upgrade their PC fleets. That's a trend the whole industry has been watching for.
And that lines up perfectly with the actual unit shipment numbers, right? Total PS units shipped were up 6% year over year.
Right, but break that down. Commercial units saw really significant growth, up 11% year over year.
Okay. Strong on the business side. What about consumers?
Consumer units were actually down 2% year over year, so you see that split pretty clearly. The business side is booming, probably driven by those Windows upgrades, but individual consumer demand for new PCs looks a bit softer this quarter.
Interesting dynamic. Now, what about profitability within personal systems? Revenue is up, units are up.
Right, so the non-GAAP operating profit was $409 million, and the operating margin for the PS segment was 4.5%.
Only 4.5%. And how does that compare?
Well, just like the overall company result, that margin was down significantly. It dropped 1.5 percentage points compared to last year.
So, wait. Revenue's growing, units are growing, especially commercial. Why the big squeeze on margins?
According to the presentation, the main culprits were higher commodity costs, basically, the price of components going into the PCs, and also tariff costs.
Ah, tariffs again.
Yeah. HP says these cost increases were only partially offset by some price adjustments they made and, other cost reduction efforts. So it looks like the costs of actually building and shipping the PCs are eating into their per unit profitability, even while they're selling more overall.
It's interesting, though, despite that margin pressure, HP seems to be pushing innovation really hard in this segment.
Definitely. They specifically highlighted new AI-powered features in their EliteBook and EliteDesk lines, trying to bring AI capabilities right onto mainstream business devices.
And wasn't there something about a high-end AI station?
Yeah, they also launched the HP ZGX AI station, which uses NVIDIA's Blackwell tech, aimed at really demanding AI tasks. They're really positioning themselves as having the world's largest portfolio of AI PCs.
Aimed at smarter workflows and productivity, I think they said.
Right. This whole AI PC push is clearly a major strategic priority for them right now. They're trying to catch that next big wave in computing.
Okay, so wrapping up personal systems. Solid revenue growth, especially on the commercial side, looks like it's driven by Windows 11 refresh. But, and it's a big but, they're facing noticeable margin pressure from higher costs and tariffs.
That sums it up well. Now, what about the other major piece of the business? Printing.
Right, printing. How did that segment do?
So for Q2, printing revenue came in at $4.2 billion. And unlike personal systems, revenue here was actually down compared to last year.
Down by how much?
Down 4.3% year over year. Or, if you adjust for currency, down 2.6% in constant currency. So a decline there.
And within that $4.2 billion printing revenue, how does it break down? Is it mostly hardware or supplies?
Supplies are still king. They represent the biggest chunk at 65%. Commercial printing hardware was 28%, and consumer printing hardware was just 7% of the printing revenue.
Okay, and the declines we saw, where did they come from?
Well, supplies revenue itself was down 5% year over year, or 3% down in constant currency. And actually, both commercial and consumer printing hardware revenue were also down, both by 3% year over year.
So declines pretty much across the board in printing revenue stream.
Yeah, pretty much.
But wait, this seems a bit counterintuitive. Didn't the presentation say printing hardware units were actually up slightly? Like 1% year over year?
It did, yeah. Hardware units were up 1%, even though hardware revenue was down 3%.
So what does that suggest? Selling more printers but making less money on each one?
Could be. It might indicate lower average selling prices for the hardware they sold. Maybe they sold a different mix of printers, more lower-end ones, or maybe pricing pressure from competitors,
Or maybe promotions.
possibly. But honestly, the real story in printing profitability isn't usually about the hardware units themselves. It's about the supplies.
The classic razor and blade model. Sell the printer cheap, make money on the ink or toner.
Exactly that. And despite the revenue decline we just talked about and those flat-ish unit sales for hardware, the printing segment's profitability is really strong.
How strong?
The non-GAAP operating profit was $814 million. And get this, the printing operating margin was a very robust 19.5%.
Wow, 19.5%. Compare that to the 4.5% margin we just saw in personal systems. That's a huge difference.
It really is. And what's maybe even more fascinating here is that the printing margin was actually up slightly, zero point 0.5 percentage points year over year.
Even with revenue declining.
Even with revenue declining, it just underscores how absolutely critical those high-margin supply sales, the ink and toner, are to HP's overall bottom line and profitability picture.
Absolutely. And you mentioned a kind of interesting detail from this segment, too. Something about security.
Yeah, little footnote almost, but quite interesting. They launched new LaserJet Enterprise devices that they described as the first printers in the world designed to guard against quantum computer attacks.
Quantum computer attacks on printers.
Apparently, security becoming a selling point, even in unexpected places like printers, shows how pervasive security concerns are becoming.
Definitely something to watch.
Yeah.
Okay, moving beyond those two core segments, personal systems and printing, HP also made a point to highlight several key growth areas, places where they're trying to generate new momentum.
Right. And the source said that collectively, these areas saw sequential revenue growth. That's quarter-over-quarter growth in the low single digits. So some positive movement there.
What kind of areas are we talking about?
Well, there's hybrid systems. That includes things like peripherals needed for hybrid work setups. They mentioned new mice, keyboards, conferencing tools like video bars.
Makes sense. What else?
They also called out consumer subscriptions, things like their ink subscription plans. They said both revenue and the number of subscribers grew year over year in this area.
Oh, and didn't their all-in plan get some kind of award?
It did, yeah. Recognized by Gadget Pro as a best sustainable tech product.
Yeah.
So a nod to sustainability within their subscription model.
Interesting. Any others?
Workforce Solutions was another one. They said revenue increased both year over year and quarter over quarter here, driven by both hardware and services.
Like what kind of services?
Things like their personal systems, digital services, and lifecycle services, helping businesses manage their PC fleets. They mentioned some recent customer wins in finance, retail, and healthcare for these kinds of solutions.
Okay, and AIPC must be in this list too, right?
Absolutely. Shows up again here as a key growth area. They described it as maintaining strong momentum with consecutive revenue increases and expanding market share. And again, tying it back partly to that Windows 11 refresh opportunity.
Seems like AIPC is a thread running through the whole PS strategy.
Very much so. Then there's Advanced Compute Solutions. Revenue increased year over year here too, linked to a strong workstation market and HP growing its share there.
Workstations like the really powerful desktops and laptops.
Exactly. They highlighted products like the ZBook Fury mobile workstation and the Z2 Tower mini workstation as examples of their high-performance offerings for demanding tasks.
And finally,
industrial graphics and 3D printing. Industrial growth was up year over year, both hardware and supplies, helped by products shown at the big Drupa trade show. And 3D printing also grew year over year, mostly in supplies and services, driven by increased usage.
okay, so a diverse set of growth bets beyond the core PC and printer hardware.
Yeah, trying to build out these other revenue streams.
Okay, let's maybe shift gears slightly and look at the company's overall financial health. What did the balance sheet look like at the end of Q2?
Well, starting with cash, their gross cash position stood at $2.7 billion. That includes actual cash, equivalents, a little bit of restricted cash, and short-term investments.
And on the other side of the ledger, debt.
Gross debt was quite a bit higher, at $10.8 billion. That's a mix of short-term borrowings and longer-term debt.
So $2.7 billion in cash, $10.8 billion in debt. That means they're in a net debt position.
Correct. Their net cash debt position, as they presented, was negative $8.1 billion. And looking at the trend chart they provided in the source, this net debt level has fluctuated over the past year, but has generally ticked up more recently.
Okay, so carrying a decent amount of debt relative to cash, What about returning value to shareholders? Were they doing buybacks or dividends?
Yes, both. In Q2 alone, they repurchased 3.0 million shares of their own stock.
And how much over the last year?
For the full fiscal year 2024, which includes previous quarters, they repurchased a total of 20.2 million shares. Share buybacks, as you know, reduce the total number of shares out there, which can help boost metrics like earnings per share.
Right, and
They
dividends.
paid out a dividend of 0.2894 stars per share in Q2. So continue those shareholder returns.
All right, so that's the Q2 performance and financial position. What about looking forward? Did HP provide guidance for the future?
They did. They gave updated guidance for the rest of this fiscal year, FY25, and also specifically for the next quarter, Q3 FY25.
And what was the headline there? Good news or?
Well, importantly, their guidance for the full fiscal year 2025 was actually revised downwards compared to what they were expecting before.
Okay, downwards how?
On earnings per share, or EPS, the revised GAAP diluted net EPS guidance is now lower in the range of $2.32 to $2.62. It was higher before.
And the non-GAAP numbers.
Same story. The revised non-GAAP diluted net EPS guidance is now $3 to $3.30, also lower than the previous range they'd given.
Any other guidance revised down?
Yes, free cash flow for the full year was also reduced. They now expect it to be between $2.6 billion and $3.0 billion, down from a higher range previously.
So lowering expectations for full-year earnings and cash flow suggests they're seeing, what, slightly tougher conditions or maybe some challenges ahead compared to their earlier forecast?
That's generally what a downward revision implies, yes. They did provide some key assumptions behind this revised outlook.
Like what are they expecting for the market?
They expect moderated growth in the overall PC market for the calendar year 2025, projecting low single-digit unit growth year over year for the market as a whole.
Okay, so not expecting a huge boom, but some growth. What about their own business segments?
For their own personal systems margins, remember those were pressured in Q2, they actually anticipate recovery and sequential improvement through the second half of fiscal year 25. So they expect things to get better there as the year goes on.
Interesting. And print?
On the print side, they expect the overall market to see a low single-digit unit decline year over year for calendar 2025. But they anticipate their own print margins will stay strong, remaining near the top end of their long-term target range for the full fiscal year.
So expecting continued strong profitability in print, even if the market is shrinking slightly.
And one other thing factored into this outlook, which they specifically called out, is tariffs.
Right, those import taxes we talked about impacting PS margins, are they expecting those to continue?
It sounds like it. The outlook includes the current tariffs. The source lists them out, tariffs ranging from 20% to over 30% on print, compute, and other products coming from China.
Wow, that's high.
Yeah. Then 10% on compute and other items from Asia, excluding China, and also 10% on compute and other from EMEA and Latin America.
Any exceptions?
Products coming from Mexico under the USMCA trade agreement are noted as having 0% tariffs. So that highlights the importance of where things are made.
Absolutely. These tariffs definitely add significant costs for a global company like HP. Are they just accepting that, or are they trying to fight it?
They list several mitigation efforts they're undertaking. Things like rebalancing their supply chain and manufacturing footprint, basically, trying to move production to places with lower or no tariffs.
Diversifying away from China, perhaps?
That's often part of it, yeah. They also mention ongoing expense management, just controlling costs tightly and making product pricing adjustments where possible.
So pulling multiple levers to try and offset those tariff impacts.
And shifting gears just a bit, beyond the pure financials, the presentation also took a moment, as many companies do now, to highlight their sustainable impact efforts and some recent recognitions they've received.
What did they mention?
Well, they were recognized by an organization called Know the Chain as a leader in the ICT sector for their supply chain practices, ranking 4th out of 45 companies.
That sounds pretty good.
Yeah. And for the 6th year in a row, they were named one of the world's most ethical companies by Ethisphere.
Okay. Any others?
They also received the 2025 EcoVadis Platinum Sustainability Rating. Apparently, it's the 15th consecutive year they've gotten that, placing them on the top 1% for sustainability performance according to that rating agency.
15 years straight is quite a run. Did
And
they
they-
talk about specific programs?
They mentioned efforts in digital equity enabling the future of work. For example, reaching over 2 million new learners through their HP Life Online Skills program since 2016,
Wow, 2 million.
and reaching 54,000 people through something called HPHH, and over 9 million people reached via HP's Digital Equity Accelerator initiative. So, highlighting their efforts to expand access to digital skills and opportunities.
Okay, so there you have it. We've taken a pretty deep dive into HP's Q2 FY25 earnings presentation.
Yeah, we really unpacked it. And we
Yeah.
saw, I think it's fair to say, a quarter with pretty mixed results.
Definitely. Personal systems revenue grew nicely, especially that commercial side, which seems strongly linked to the Windows 11 refresh cycle.
But it faced significant margin pressure from those rising commodity costs and tariffs.
Right. And then printing revenue declined across the board, supplies, hardware.
But the segment maintained and even slightly increased its really high profitability margin, which just highlights, again, the incredible strength and importance of that supplies business for HP.
We also looked at their strategic push into those key growth areas, AI PCs being a big one, but also hybrid work solutions, subscriptions, workstations, 3D printing.
Alongside looking at their financial position, like cash, the increased net debt, and how they're continuing to return value to shareholders through those buybacks and dividends.
And that revised full-year outlook, lowering expectations for earnings and cash flow, suggests maybe a bit more caution about the market or internal challenges than they had previously forecast.
Although they do expect some recovery in those personal systems margins in the second half of the year.
It really shows how much detailed information is packed into these corporate earnings reports if you take the time to peel back the layers and understand the different pieces.
Absolutely. And maybe here's something for you, the listener, to think about after our deep dive today. We heard HP's revised outlook anticipates continued PC market growth, albeit moderate, and they expect their own PS margins to recover in the second half.
Yeah.
But they also acknowledge the ongoing impact of tariffs and the costs they're trying to mitigate.
Right.
So the question is, how might the momentum they're seeing from the Windows 11 refresh cycle and their big strategic bet on AI PCs specifically interact with those persistent cost pressures? Can the volume and, maybe more importantly, the value or pricing power of AI PCs be strong enough to significantly counter those cost headwinds and really drive the kind of margin recovery they're forecasting for the rest of the year?
That's a great question. Can the new tech offset the old costs? Something definitely worth watching in the quarters ahead.